the sound of your life. It's gone 17 minutes after 6 on the OFM Business Hour. Hello, hi, I'm Wreaking if you just tuned in. Now, picture this. After having historically filed all of your tax returns on time, making good on your dues to SARS and your compliance status reflecting as fully compliant, you've seen it on your e-filing, and then one day you wake up to a notification of audit and request for relevant material based on, and I quote, risks detected. Now, according to Jashwin Baijoo, Head of Strategic Engagement and Compliance at Tax Consulting SA, this has become the shocking reality for many historically compliant taxpayers, and SARS's audit team appear to be strongly enforcing the zero tolerance policy on any non-compliance. Aiding their cause and easing the pressure of the job are the data-driven insights derived from AI use. Hence, this is our Tech Thursdays conversation. So here's part one of my discussion with Jashwin from Tax Consulting SA. It's such an honor to have you on the Business Hour tonight. Well, Jashwin, how has AI been integrated into SARS's audit processes, and what prompted this shift towards technology?
So you'll recall that one of SARS's key strategic objectives is the modernization and vision of a smart and modern SARS. Now, AI very much bolsters their capacity to conduct in-depth and extensive audits. And an example of that is quite simply using AI to analyze bank statements going back 10 years, whereas it would take an individual auditor days, if not weeks. AI can do it in a matter of minutes. And it is information like that SARS can then leverage to open an audit and a request for relevant material for both individual taxpayers on their personal income tax, as well as corporate taxpayers and non-juristic entities such as trusts on all of their tax compliance.
What risk factors are AI tools identifying in compliant taxpayers' accounts that may have previously been overlooked?
So your key identifying criteria is an analysis of financial transactions, credits on bank statements and expenditure items, which were not previously declared or captured as gross income. And that then leads to the adjustment to gross income in the audit findings, upon which amount the taxpayer is imposed additional tax at their marginal rate. However, the biggest problem and concern for taxpayers is not so much SARS picking up the additional gross income adjustments, which in some cases are substantial. We've seen adjustments to the tune of 116 million.
Sure.
But it is also the understatement penalties, which can range up to 200% of the capital tax bill.
My goodness. How does SARS ensure the accuracy of AI-generated audit triggers, and what can taxpayers do if they disagree with an audit that's initiated by AI?
Yeah, correct. So the notice of audit is sent out and subsequently followed by a request for relevant material. Now, this is a twofold process because it allows SARS exactly that, to verify the accuracy of the data from the AI reports, as well as allows the taxpayer an opportunity to then address these averments from SARS's side and dispel the inclusion of certain amounts in gross income. Now, what we've seen on our side practically is quite often the AI, not being as smart as one would think, spits out information on all credit transactions into an account. However, upon a proper analysis and computational report, it can be found that a large portion of that is attributable to intra-account transfers, meaning between the taxpayer's own accounts, and it's only classified as gross income upon the first receipt. Any subsequent transfer between accounts excludes it from the definition of gross income, meaning you can have a request from SARS to the tune of 100 million. But if 50 million of that is between your own accounts, well, then you're only looking at an adjustment of 50 million.
Well, we're in the age of a lot of concern around personal information privacy, and the process involves analyzing taxpayer bank statements without prior warning. So how does SARS reconcile this with said concerns about privacy and data security?
So it must be remembered that your privacy and your data security quite often pertains to third parties. Now, SARS, as an arm of state, has the authority and also automatic exchanges of information with other revenue authorities across the world to freely access this information, keep it confidential on their side from third-party interception, of course, 100%. But where there is a suspicion of fraud, misrepresentation, or material non-disclosure of relevant facts, it's at that stage that SARS may exercise this authority. And that speaks not only to obtaining of taxpayer financial information, but it also speaks to going beyond the limitation clauses, because your Tax Administration Act speaks to a 3-year period post-issuance of original assessment in which SARS may reconsider and issue an additional assessment. However, that 3-year limitation is lifted where there is a suspicion of fraud, misrepresentation, or material non-disclosure.
Are there specific types of transactions or financial patterns that the AI system targets during audits?
No, so your audit itself, remember, is conducted by an auditor at SARS. What they're using the AI for is the data insights that educate that audit. So your AI will very simply be a case of inputting bank statements for the last 10 years, and the AI spits out 2 reports for you, one with inbound transactions and one with expense schedules. And it is then on the auditor to request from the taxpayer an explanation as to the source of the funds, the purpose of the funds, and in the case that the funds were dissipated, what the dissipation pertained to and what those expenditure items were.
The Business Hour with Wreaking on OFM.
So let's pause my discussion with Jashwin Baijoo, the Head of Strategic Engagement and Compliance at Tax Consulting SA there. Any questions for Jashwin, you can telegram the team now at 084 222 9497. That's 084 222 9497, and we'll do a follow-up with Jashwin. There's still a part 2, in fact, of my discussion with him coming. Now,